Yeah, the section now is now on record, so we'll have the replay of all what we're gonna be doing. I just pray the battery not focus up and make I see battery to save the record. So um technical analysis now be the brain of market. You understand? Technical analysis now the brain of market. So inside here now we get two pairs. We get two type of trading. We have the synthetic. Maybe those are those guy mentor the drop, and me I know the two trade this space. Now they see my chat, my screen abi. Una they see the chat abi. Una they see the chat. Okay, okay. So so all right. This one na be the synthetic. If you dey hear of those volatility, boom crash, index, wait my bring out the pairs so that una go see am. See am VX10, derive, crash, boom. Na here, na here for dey analyze this market. But I don't like analyzing this market. So the question now might tell you the basis of trading. Mr. Easy, you won't say you never dey learn anything. Start now to dey ask yourself, which type of trader do I want to become? Do I want to become a day trader? Do I want to be person that will be trading 24 hours? Do I want to be person that will be trading just in a week? That one I be one thing wey go give you mind to say you can become a good trader. And secondly, you have to ask yourself again this question: which type of trader do I want to be? Do I want to be trading crypto? Do I just ask yourself, what do I like in trading? Do I like crypto? Do I like currency? Do I like derive? Which one is easy for me to scale through? Which one is easy for me to understand? Those things will build ego for you to take understand how you go take learn how to trade. You understand? This market that you're seeing, they are all moving the same way, but in different styles, in different patterns, but they produce the same result. It's money, they all give money, but different with different style, different pattern. So if you are a currency trader, there is a way currency people like us, me that is trading currency, there's a way I trade. I trade based on what I see and how the market is moving. If you are a crypto trader, you trade based on what the that cryptocurrency is behaving. Either rising or is either falling. But on a normal, you are just there to make money. That's just the truth. So this thing is what you have to know first before you say, okay, this is how I want to start building my trading journey, before you can start analyzing the market. So what we are about to do here is pure technical analysis, and that technical analysis has to do with how we're going to get a trade, how we're going to enter, how we're going to find the best place to buy and sell. And if you don't do that technical analysis, you're just like trading blindly. You don't understand what is going on. So I want to ask you now, which type of trader are you guys? Two of you. I think I only have two people active on this live now, or more than two. I don't know, but I think we are more than two. So, which type of trader, Mr. Easy? Which type of trader do you want to be? Do you want to be a crypto trader? Do you want to be a forex trader? Do you want to be a synthetic trader? Which one? Okay, the synthetic has to do with it's like a crypto, but it's practically different from crypto, because I really can't tell you the assets of what they exchange, but I know synthetic has to do with either currency, crypto, anything that has to do with exchange of with either that's with for me. I can't tell you that I know much about synthetic, in the sense of I don't literally know the in depth of it, but I know that they have to do with currency, crypto, and everything that has to do with trading, because it's combined. It's a combined platform. If you try to get me now, it's a combined platform. Why I say it's a combined platform? If you check their list here, they have forex, they have stock index, they have commodity, they have derive, they have cryptocurrency. That's why I say it's a combined. Anything that is happening in the crypto market reflect here. Anything that is happening in the forex market reflect here. Anything that is happening in the stock market reflect here. These are just It's just like all the currencies, all the exchange currencies combined to form this synthetic. That's why it's called binary, because all what we are doing on trading is binary system. You understand? It's binary system. That's why you see this binary.com here. So if you're trying to be a binary trader, this is where you get your analysis from, you pass from. So you either be in in the forex market, or in the stock market, or in the currency market, but it's just combined. Currency market is just for only currency. You're trading either dollar, peso, naira, anything that has to do with exchange, that any country has to do with money, you are trading that kind of currency. That's currency. While for crypto, you are trading either coin, any type of coin that has to do with coin. That's what you're trading. So you have to take your time, determine yourself in your own mind which of them is very easy for me. Like before I started, I know little bit about currency. That's in the sense of I just love currency. To be very honest, I love currency. So I said to myself, I'm not good with crypto. I don't know how to use those kind of crypto apps that much, but I'm good with currency. So I started learning how to use currency apps. That was why I was able to build very fast. So if you are good with currency, man, do not force yourself. Just accept it. All right, just accept it. But if you're not good with crypto, you're not good with forex, you are good with volatility, this binary, just accept it. It's your calling to trade that way and make your money. As long as you're making money, the goal is for us to make money, nothing else. We are not fighting over it. It's just to make money. So ask yourself which type of trader you are, which type of trader do you want to be, and start building that ego for it. Start using that market to analyze, do everything there, despite the fact that we are putting everything together, but just try to bring out yourself, fish out yourself out from all of us. Somebody's making a request to join. Um, okay, I think you opened the quote. All right. So just know that one for yourself. All right. Are you making request? I don't know. Okay, open quote. Okay, okay, yeah, okay. I understand. Okay, okay. See, all right. Barbing. That's the passion. That's the passion for it. Yeah, yeah. Okay. Make money. Yeah, yeah. I understand. I understand. Let me say something. Let me say something. You know one thing about the this market, this trading journey is that if you are a busy person, that's why they scheduled the market into three places so that everybody can be satisfied. You won't say there is a partiality, or there is a doom of your money, in the sense of the market is divided into three places. There are people who work 9 to 5 and still trade. That's people who work from morning till evening, and by this time when they come back for work, they eat, they bath, they analyze the market down. The next day, in their work section, they place their order. You can place your order in the night if you know that what you analyze, what you did is right. Then you place your order down. When the market get to that your order, it will take your trade, and your trade will start running. When it runs to your profit zone, it will kick you out of the market, giving you your profit. Those are people who they call the swing traders, people who don't have time to sit on the chart and start looking at the chart. Why the day traders are people who sit on the chart throughout the day to find setup. Why the scalpers are people who stay just 5 minutes. 5 minutes, they make $10,000, $20,000 with 5 minutes, but with a high potential risk. So they risk high to get high. But the truth is that everybody is making money, and the market is giving everybody to their satisfaction. The market is always there, always running 24 hours. So I believe this is what we will talk. Maybe when I call a WhatsApp call, and we'll discuss that one maybe at the end maybe at the end of this class, or I will discuss about that, so that I will find a way to put you in a schedule where you can study yourself. If you have time to read those PDF, learning won't be difficult for you. It will be very easy, because why I said so is that I know you are in abroad and you have to still do your 9 to 5 job, you have to still do other things to meet up to your bills and other stuff. But if you find time, even if it's 1 hour or 30 minutes, you take that 30 minutes to read through those books, understand those books, even if it's 4 months you are using to read those books, as long as you understand that concept, with the few videos that we have been doing and YouTube and other stuff, it will help you build your trading journey, even if it takes you 2 years. And I want to make this clear to all of us. The trading does not mean you will learn within 3 months or 4 months. Some people, it takes them 5 years. I have a lady who is about 2 years now in trading. She's not profitable. She hasn't understand herself in the market. It's just the fact. But when she start getting good results from trading, she will forget about those times she had been sitting, trying to understand herself, trying to understand what she's doing. So that's trading for you. It's the most easiest job, but very difficult to understand. It's the most easiest job, but very difficult to understand. That's just the truth. So, being said and done, let's just do one or two on the chart. Do you guys like this volatility, or I should dive into forex? That's normal pairs, normal currency pair to do analysis. Because right now these guys are on, this pairs is already working. They are moving now. You can trade them, but forex will resume their trading by that kind 10 or 9 o'clock. That's when forex will. No, in the night, this night they should resume by 10. Some currency will resume by 10, some by 12, some by 11. So if you guys want me to do analysis from here, fine. If you want me to do the other side, let's switch to the other side. Which of them is okay for you guys? Okay, no problem. So should I do analysis from here, or I should switch to? All right, thanks man. um so what we'll be using for technical analysis, the thing about technical analysis is finding possible miss, to use all your tools to analyze the market, as long as you get the best satisfaction. And inside technical analysis, there's, if you have read your candlestick bible, there's what we call the top down analysis. The top down analysis is just like you getting from the top to the bottom, that's to the down of the analysis, and from that same down again you get to the top of that analysis. So it's very good when you want to, if you want to make your trading journey very easy, understand top down analysis. If you want to really make your trading very easy, some people understand it, but they don't know the type of tools to use, and which is very is really affecting many of them. Even me, sometimes I check some chat of some people on that group and I see their tools they are using. I just come here and start finding that tools, so that I can also be attached to that tools. So there are tools here that I have already kept as my favorite tools for analyzing any market. You can see my T here, my text. You can see my patch. You can see my cutout, my right angle, my short position, my long position, my horizontal ray, my horizontal line, and ray, arrow with trend line. These are the most tools I normally use when analyzing the market. So if you at your own end, please try and figure out tools that are very interesting and very okay for you to analyze the market. You can use any other tools of your choice, but it's just for you to get the best and accurate drawing when you're making your analysis. And let me tell you, trading is all about drawing. If you don't know how to draw, in the sense of you don't know how to mark out points like 90, 60, 25, all those kind of degrees and other drawings that has to do with to make your trading beautiful, you will never understand the journey of a trader. You will never. So when you see a chart, they just present a chart to you and you see different lines on that chart. They are showing you movement, they are showing you curve, they are showing you angles, they are showing you something that will make this thing give you a beautiful shape in the market. So if you understand those drawings and lines, those drawings you saw there, you just try to understand them. Think like that person who did that drawing. you are very set to analyze your own market by yourself without that person giving you ideas. All right. So on this chart, they don't have the monthly, the weekly, the daily, the 1 hour, the 2 hours, but what they have is 24 hours. 24 hours that literally tells you in a whole day, that's day and night, 12 hours, that's 24, and the 8 hours, the 4 hours, the 1 hour, 30 minutes, the 15 minutes, down to 1 minute on this type of analysis. That's on this platform. So that's what we're going to be using. We're not going to be using a monthly, weekly, but we're going to be using multiple time frame so that we don't get stocks when the market start running in the position we are trying to think that the market will go. So we're going to be using BS10 because it's very common. I believe that's very common with you guys. So BS10, that's the head putting on right now. So right now I'm on BS10. Okay. So this is the market since the 24 hours. This is what this pair has been doing. You can see it. And please don't get confused when you open a chart and you just see all these lines. Very plenty. Don't get confused. Just focus on the previous movements. What I mean by the previous movement is you can draw your chart, like position your chart like this, even if it's a phone or it's a laptop. Just position your chart, focus from this end like this, all this move down to this particular place. Don't go back, because some people do it. Don't go back and start picking points from here. Picking points from here is still good when you go back, but you're going to get your chart very clustered and you won't literally understand what you're doing again. So just focus on the previous move. The previous move the market has been doing. Just focus on that part. So which I'll be focusing on. Right now, we're going to be talking about support and resistance. That's top down analysis. So we just learn support and resistance and top down analysis. Right? On here, I have the market reverse from here. Every turning point in the market is a support or either a resistance. So the market reverse from this point. Let me put it here so that you don't feel like, oh, this guy, what is it doing? The market reverse from this point, from this previous point here, then move down to this particular place before changing character to this upside again. So I have now two particular places that I can call a support and a resistance, which I will take my stuff now to this place and put it here. Please, we are also working with market structure. All right, we are working with market structure, so don't get confused. So in this place now, I have two support and resistance here, and let me check out what I have again on the market. I have another resistance here at this point, a resistance, because the market get to this point and reverse, and I also have another support here. It gets to this place and reverse again. You can see that I'm just doing it because I'm seeing them in the eyes. To get support and resistance, you don't need to zoom in like this. Can you see anything here, guys? Can you see anything here? So so it's not advisable to stock your chart like this and start drawing your support and resistance. It's not advisable. So you just have to zoom out a bit, make it more clear on your eye so that you can see what is going on in the market. So now it's clear because I have already zoomed out and I'm making it to fit my eye look. So from your own end, do it to fit your own eye look. All right. Do not do it because you just want to make it smaller and no, that's not the right way to do it. Make it look good in your own eye. So I spot another resistance because of this leg here. And when drawing a support and resistance, it has to be more than two touch in the market, in the sense of when you draw a line, the support has to touch 2 to 3 points in the market. So let's check now if I have 2 to 3 points in this market. One is this guy here, and the other one is this guy here. And the other one, let's just say this guy broke out from here and came back, retest and run down is another touch. That possibility that this market will hold. Another one is here. So let me take back again and see something. You can see another touch here, another touch here, another touch here. So I've gotten more than 4 touches. This place is a valid resistance now. For me, it's a valid resistance in the market. So this is a way you get your top down analysis. So let me look for let me say a support in the market now. I've gotten one touch here, I've gotten another one here, I've gotten another one here. Let me say I got another one here, but it's a bit deep inside. It's still valid because a leg is here. If you watch here, here is another touch, here is another touch, a support already. Here is another touch, support. Let's go back. Here is another touch, a support. So I've gotten three, let me say 4 or 5 touch from this place now as a support zone in the market. So I've gotten a position where I can trade from now. I've gotten a position where I can trade from. So what I will do next is to scale down to another time frame to check any possibility miss that will make this trade not to run from here, that will make this trade not to run from this point, this place now to this particular point. You understand? Because here for me now, I'll be targeting this place as my take profit. So I will scale down now to, like I told you, this guy does not use the weekly, the monthly, the daily. So I'll be looking out for another time frame like the 8 hours. Then I've already moved down to the 8 hours. Please guys, if this laptop turn off, please do not be offended though. The battery not today power 62% now. I'm trying to make a way to fix that battery. So if it turn off, don't be angry. If they bring light, I'll still call you guys online. So you guys should be active as well, even if it's around 12. I really want to teach this stuff. This is how I started, and this is the same way you guys still gonna be start with, and eventually with time we all grow and we'll no longer use this type of pattern to analyze the market. In an advance we'll be using, but I'm trying to make this easy. Error. The server is it's kind of having an error. Let me try again. Let me refresh the server. I'm coming, the server is loading. So please, if they give an assignment and they say do so thing, it's very important you do it. Even if you're an expert on it, it doesn't show sign of um let me say it doesn't show sign of disrespect from you or from the person who this thing don't disappear. It doesn't show that, but it's just a sign of yes, you're following. We have disappearance. Okay, it's from my network end. The chat don't disappear. That's the reason I don't like analyzing on this place. Can you hear me? You guys can hear me, right? Um, this the chat is still loading, but I don't know why it's very slow today. Connecting. Oh, network don't start in Jeba work. Ijebode people. No internet. Oh, I have 3G on my phone. That means we don't dey get network failure like this. Can you guys hear me? Oh, you lost your network. So we have the show now. You guys are seeing my chart now. My screen dey show now. If na lay dey not bad now. I don already cause say make the others come now. At least in as much as I'm trying to help the journey make for fast, somebody still need to help himself. So not be my fault if they like as I call the corner, shey some people at ten d, some people won't answer. If the ones wey no come in na their choice, make I still write say make dem join so dat no be like say I no wan push everybody. Please join oo, make una join. With dat link. Okay, so I don still send message again. So one thing I no like dis place, e dey always dey clean drawing. I dey tell you, e dey tire me. Na im make me no dey like to analyze am too much. So my impute the drawing. Like if you wan draw support and resistance, if e dey cluster like dis, e good oo, but the thing is dat you no go fit too see am finish. Make I turn off dis light. You no fit too see am finish, so it's not advisable to use dis kind of drawing face. I dey come first, easy abeg. The white make I turn am to black. Colour based on appearance abeg. Make I turn am to black and I like the black one. Shey gee, dis background dey fine oo. Okay. E no go disturb my eye for night. Shey e dey show well for your end? You dey see am well for your end abi? Okay. Alright, no problem now. To draw your support and resistance, you just need to make sure say e dey show well for your eye. Na only your eye go fit tell you how your trading dey look or not. If your eye no dey see am well, dat means e no clear. You understand? So for me now, like the previous drawing, I see dis place as resistance, one resistance wey I see. Here again, another resistance as well. Here again now, another resistance. Though I will take dis guy, I will take dis one. Why I say I go take dis one? Because the market move come dis place and e come push back again. Dats to tell you say here was a fake out. People wey no understand trading, as they just saw dis move like dis to the upside, they will just take the trade and it was a fake out. So dat place will be a resistance for me. So now let's look for the support. Although even if I say okay, let me take another point again, I will take here again, resistance. Here again, a resistance, and here again a resistance. So if we say let's look it from up dis side, all dis place are support and resistance. Support turn resistance, now support turn resistance, now support turn resistance, now support or turn resistance. The same thing goes here and goes here. And if you watch how I draw dis, how I put dis line now, very easy, no stress. Because of why? I already understand my top down analysis, how my top down analysis work, and that gives you that edge say at least you don get your support and resistance. Now make we talk of how to use trend line. Trend line can be used in many ways. It can be used as your possible means of entry. It can be used as your dat is your trend change. It can be used as your support or your resistance, and to get trend line you need to get more than two touch in the market. Dat means if you get first touch, you get second touch, dat trend line dey valid. To get support and resistance as well, you need to get more than two touch. If you get first touch of support, you get another touch again for support, making it a valid support. And if you watch all dis support now wey we don draw, we get more than two touch. Dis one is one. Make we go back to dis side. Dis side na another one again, another touch. Here is another touch, here is another touch, here is another touch, here is another touch again. Dats to tell you more than multiple touches. Dats to tell you it's a valid support. Dis guy again, we have another touch here, we have another touch here, another touch here, another touch here, but invisible. Dats a minor zone. We will talk about minor and major later. Dats why I want you guys to turn up. Make dis people dem come online. I want dem to be in dis group. Let dem stop focusing on what's it called, the stuff, the replay. Please come online, please. Dem dey beg now, please come live. So there are minor zone and major zone, which I'll be talking after I don do dis analysis finish. So if you watch here now, multiple touch, another touch here again, another touch. All dis are major zones. So if price go fit reverse from dis major zones in the market, dats to tell you dat those zones are very strong to hold the market even for 1 minute time frame, for 30 minutes, for 5 minutes, for 15 minutes, 1 hour, 2 hours, 4 hours. The price go hold for those points. And if you watch now, we get multiple touch for here. One, two, three, dis one 4, 5, 6, 7. You can see multiple touch, and you can see another touch here, 8. To get best support or resistance in the market, dat line must don play two character. It's either the line has played as a support and later turn to resistance, or the line has played as a resistance later turn to support. Dats to give you a good accurate of dat line to hold next time when market get to dat point, and which dis line now, dis line has already played dat character. It has already played dat character, because if you say now let's check the waves of all dis market, e played as a support here, plays as a support here, e plays as a resistance here. You can see it, e plays here and broke out, then come back again, play as a support, then broke out completely, go up and never came back again to break down. Now it's now playing as a support. I think you understand. Dats to tell you dis line, dis particular line you're seeing here, let me make it another color, is a valid trade, is a valid zone to hold next time in the market. It's really a valid one. Let me make the line bold so you guys can it's really a valid one for us to trade. We can trade on dis line in the future, and which already is playing now in the future. So let's look on the other side again for resistance. If you watch, a resistance that has turned to support and later play character of a resistance or play character of a support is a valid zone to trade from. And if you watch this next guy, it has already played that character, in the sense of the price broke out from here and went higher. It came back, it broke the line again, went inside. Alright, e did not play the character of a support. E failed to hold as a support and break inside again, came back, broke out again, did not play that character of a support, and then broke in again, still did not play that character of a support, and then move higher, break out again, played a character which I will call a retest. It's called this kind of pattern. It played this kind of pattern, a shallow retest. So in the sense of it played this here. If you watch here now, let me take this guy inside so you can understand what I'm trying to say. If you watch here now, it played that character here. So he broke out of this guy and played that little character, then move up and then came back again to hit to that is, let me say, he consolidates here and then move in, retest again, play this character here on this zone, play this character, which I will say from this zone now. You can see it here, which he plays this character here. So it's trying to tell you that this zone is a valid resistance for us. So I'll be taking out this zone for my valid resistance in the market. So now we've made being said, we've used our top-down analysis to get a valid zone to trade from. The next thing now is how do we get the entry? How do we get the entry? We are working on the higher time frame now. So to get your entry now, I want to go to the 8 hours. What you will do now is to go to the 8 hours to look if what you have drawn on the higher time frame match with the 8 hour with the 24 hours time frame. So I'll be going down now to 8 hours to watch what I did here, if it's correct for me. So watch the 8 hours now. The 8 hours is accurate for us. It's very, very accurate. It's very, very accurate. So we are trading within this range. We are trading within these two black lines now. That's where we are trading from. So if you are using this pattern to find your trade, it's very, very easy. You're not going to be stressing your brain of how will I do this, how will I do that. So it will be very, very easy for you. No stress, no pain. You just have to follow the rules if you understand it. So right now we have a good support zone and a good resistance zone in the market. So what we'll be looking at for now is to get those minor and major support inside the 8 hours time frame. You understand me? So before you can do that, you have to understand that market structure. Market structure is something that you have to understand. So right now we have, let me use something to highlight minor and major structure. Okay, this guy, this guy is a major structure. It's a major move to the upside. Let me use another color, some black. Okay, this guy is a major structure. So from here to here is a major structure. So here now, I will shade here out as a good resistance for me. For me. Now I have my resistance here. And if you watch here now, let's say this price now moved down to this point and it started. If you read your market structure, that's your candlestick bible, there's what you call consolidation, and which was literally happening here. The market was consolidating, which I will say, here is a consolidation region. For me, is a minor structure, is not a major. From this point now, from this point to this point is a major. Are you there? Okay. From this point to this point is a major structure. I've already gotten somewhere to trade from, which I said I'll be trading from this black line to this black line, right? This black line to this black line. So I've gotten my major structure. This point to this point is a major structure, and they are the higher time frame structure, which are the 24 hours. Let's go back to the 24 hours. So if you watch now, it's very big in the eye and obvious on the 24 hours. So this zone and this zone now are 24 hours zone. These guys here are the 8 hours, this full place. Let me look for something to give you highlights so you can literally understand that major and minor. This stuff that I'm talking has to do with market structure. So you don't just understand the concept here. If you read your market structure, you will get that full concept. I'm coming, looking for a way to bring out something to highlight it. Oh, this guy does not have highlights. Um, no highlights, no highlights, no highlights. But it's cool. It does not have an highlight. Highlights, 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 highlights. No, no, no. This guy don't have a highlight. So but it's cool. So these guys are the 8 hour structures. From here to here is the 8 hour structure. Why from here to here is the 8 hours? From here to here is the 24 hours. From here to here is the 8 hours. From here to here 8 hours. This is the 4 hour structure. 4 hours, 4 hours, 4 hours, 4 hours, all these one. But these big guys, this big one, this big one, this big one, they are the 24 hour structures. That's the big structures. So having said, we have our 8 hours. Okay, we are going back to our 8 hours time frame to start looking if what we did on the 24 hours was accurate. So right here now we have what's called a bullish market. The market is moving to the upside already, which if you were to be in the market when the market started coming down from this point to here, you would have started taking buy position from here and targeting this point because you are trading from this region to this region. And if you watch here now, this resistance has added has acted as a support and now acting as a resistance in the market, which is trying to show you that this place is a powerful point for you to start buying or sell at this region, from this region, before the market will either push to the upside further or push to the downside further. So on this 8 hours now, we have to still look for minor structures that will possibly make the market not to buy or sell from where we target or where we enter from. All right, you're hearing me? Okay, so now I I can see a structure that can make us not to get to this particular wait, I can see a structure not that will hold us not to from this point now, from this point not to get to this point. I can see structures now from these 8 hours. And mind you, if you're analyzing the market, it's advisable for you to start from the higher time frame, in the sense of if you are using the monthly or you're using this type of trading platform, you're supposed to use like the 24 hours and the this thing. That gives you edge that what you're doing is kind of accurate, in the sense of if you follow the steps and the strategy that I'm showing you, you will get a good success if you're analyzing the market. And this is pure top-down analysis. No, nothing else is attached to it. Pure top-down analysis. When you're hearing of pure top-down analysis, this is how they do it in a beginner's way. In an advanced way, when I give you an advanced way technical analysis now, you will get confused because I will literally make everything kind of in my favor, which will get you confused and you start asking why I did this, why I did this. But I'm trying to make it simple so that you can easily use this strategy to start building up your own strategy. So now, like I said, if I was to trade this market, I will start buying from here and saying here will be my exit, where I will take my take profit, where I will put my take profit. But because of the understanding and the accuracy, something might hold the price not to get to this point, not to get to this particular point now. So I will have to find it on the lower time frame, like the 8 hours or the 4 hours. Then I will say okay, I'm satisfied with what I have gotten. Then I will start looking for either buy or sell on this time frame. So On the 8 hours now, something might hold me not to get to this particular point, which I have seen here. This point now can hold me not to get to that particular point, because that place is a support that has hold this market to pull to this upside, and then the market break out and never tested it. So I will change this color. Okay, so nice. Okay, if you watch now, the market broke out and moved down, then something hold the market here, a support, and then push the market up to this resistance that it has already been broken, and then this price now hit down further. It did not come back to touch this line. Now it has come to touch it, and if you watch inside this particular point, if you watch inside here, let me highlight this guy with another color. Let me tell you this, if you are doing technical analysis, that is with support and resistance, please always change the color. Alright, so you understand what you are doing. It's very very important you change the color to understand, yeah, to understand what you are doing. If you don't change it, you will get confused. Alright, so let's zoom out to that place. Let's see the kind of reaction we are having on that place. So if you watch now, like bullish candle and bearish candle. These red ones are the bearish, while these green one are the bullish. So if you watch now, the bullish try to push further and they couldn't. The bearish push back down. So the bearish now try to push down, but the bullish push again back, and they end up closing at this point. So the bullish again try to push again, the bearish push them back, and now the bearish are now pushing little by little, that is bit by bit, to push down. If we say let's watch on this candle, what we have on this candle. Now let me remove this highlight. If we watch on this candle, if you have studied your candlestick Bible, you will know we have a top, a twisey top, in the sense of the wicks are just different. These wicks tell us what is happening. The bears try to push down, the buyers push up a bit. Now the buyers try to push up, the bears push them down. And inside this twisey top we have a pin bar here. You can see the pin bar. This is a pin bar because, yeah, because the bulls try to push up, but the bears say no, they push down. The bearish say no, they push down. Then they form this twisey, this pin bar. So this is a sign telling you that this market can possibly reverse to the downside, to this down point, It can reverse down. So now we have to play the role of a trend line in this market. Having said it, we did not get our trend on a normal day. We did not get our trend. So getting your trend for the higher time frame is not bad. It's really not bad. But it's advisable you get your trend from the daily or from the weekly. That is from the daily or from the weekly. I don't advise people to get your trend from the monthly. The monthly tells you, the previous candle tells you what is going on the monthly, because the candles are very very big, so you can't easily spot your trend lines there. If you are waiting for those monthly trend, you're gonna wait for 8 months, 9 months, and you're not gonna see trend easily. So when you use the weekly or the daily, you will get trends in the market, what is literally happening that full day, or what that week, has that week been trending either upside or downside. So it tells you that the market is doing something, literally trending. So now, how do we get our trend in the market? That's where your trend line is. It can be played in the market. So if you watch now, tell me with your own eye, without you putting a trend line, where have we been coming from? Have we been coming from the up, or have we been coming from the down? Using this full space, so do not use this previous space, alright? Or okay, let me start with this. Use this leg now, this full leg. Where have we been coming from this leg? I mean, where have we been coming from If you look from here, from this point now, this was the lowest low of this market, and this was the highest high of this market. So where have we been coming from? Have we been trending up or have we been trending down from this point to this point? Ah, okay, from this point to this point, where have we been coming from? Have we been coming from this up or have we been coming from this down? Where have we been coming from? Okay, uh, okay. Let me see if I can close the guy. Is it showing everything now? Okay. Yes. Yes. So where have we been coming from now in this place? From this, because this is the starting and this is the ending of this trend. We have been coming from the downtrend. We have been coming from a downtrend to uptrend. We have been trending from down to up since 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 2022 May 28th. We have been trending to 20 December 2022. So right now, this is to tell you that we have been trending up. Now we are now trending down. So how do you draw your trend line in the market? Some people don't know how to draw a trend line. Like me, I'm still learning how to draw a trend line, but I won't tell you that I can't draw a trend line. When I started drawing a trend line, I you can see the chart, right? Mr. Easy. Okay. When I started drawing a trend line, I literally draw the trend line either touching the body of the candles, like I do it like this, and I said I've drawn my trend line. But that wasn't right and for me to draw. It wasn't right, right? It wasn't the right way to draw a trend line. So I learned how to draw a trend line from a guy from online called Real, Ray, Real. He taught me you draw a trend line perfectly if you did not stress the line. You didn't draw it because you must put that line there, you must put that line there. You didn't do it that way. The trend line just enter free and fair. No stress from you and the line. Alright, just draw it, and if it enters, it enters. If it's not there, it's not there. If it's there, it's there. So having said, you don't draw a trend line from the bottom say it's a trend line. You don't draw a trend line from here. You draw only this trend line like this when you are trying to get a channel or trying to know what the trend is actually doing. Is it in a channel or is it either a kind of a movement that is stuck in somewhere? Alright. So some of my chart you often see, I draw the trend line in a two position and I send it on that chart. That is not a trend, but I'm trying to give you a sign that this market has been stuck in inside, let me say inside a hole or a pipe. Is the market has been stuck inside a pipe and is finding a way to move out from that pipe. So that one is not literally a trend, but if you look it from the bottom, you will think it's a trend. It's not a trend. You have to look it from the top of it. So either you draw from, if you are in a downtrend, you draw from the top of that line. While if you are in an uptrend, you draw from the bottom to give you as a support like this. Alright. So if you are trending up, you draw from the bottom of it. If you are trending down, you draw from the top of it. So whenever you see me now, I draw a trend line and I drew it like this and I send it on the chart. I send it to the group that watch this guy, watch what he has been doing. I'm trying to tell you that the market has been on this channel inside this thing. I take it as a pipe, has been doing this something like this for a long time. You understand? It's just moving inside this place. It's not going out, and this is not a good trend. All right, it's not a good trend because why? The market is finding a way to either pull down to this side or so with that trend, with this channel that I just drew, with this thing that I just drew, it give me guide to watch out where the market will burst out from. When when a water is running in a pipe and there is no leakage on that pipe, that water is likely to flow out from the pump mouth where they normally open and close, you understand. But when that place is locked and the water is trying to find a way to run out from that point and is not seeing any way, it can burst the pipe with pressure, and that is what we are trying to channel into trading. We are trying to channel that into trading. This chart that you're seeing is like a river. So if you can be able to channel them, you will know the direction where it's likely to move to. So when you see me draw this kind of things like this on the chart, I'm literally telling you that this thing is moving sideways. It's moving in a pipe. It's looking for a way to move out, but no way. And when it finally gets a way to move out, it will burst that pipe and either take to the upside or take to the downside. And wherever that the trend went to, that is wherever the trend go to, we follow as a trader. We trade with the trend. All right. So so that is the way I do my own when I'm trying to analyze. And if you want to draw a trend line, you have to draw it to be able to touch multiple places. All right. As a beginner, you just have to draw a trend line that will touch not only one, but at least 2 to 3 points in the market. So if you watch this guy, the way I draw this trend now, we have a one touch here, one here. It's already touching here if you can see it. And I think it's not touching, but it's close to it, very, very close. And we have another touch here. We have another touch here. That's a three touch. One, two, and three. So we have a good trend that the market is trending down, is trending to the downside. And again, it tells me that I have a downtrend. I'm not going to be trading against the trend, which literally tells me that if the market get to this trend line, I'll be looking out for a sell to this downside, because this trend line will be acting as a support in the market. So you can see that I did not even stress myself when I was drawing this trend. Not that I know how to draw a trend, but because you have to make it easy for you to draw it, in the sense of you don't want to stress it, you don't want to make it by force. If the trend is not there, I will put it. If the trend is not there, I will put it. That means you are trying to tell the market that you know what you're doing in the market, and the market will tell you that no, I will take your money and you can't fight me. So that's what the market will just tell you. And this is the best way to draw a trend. Very easy, no stress, no pain, no gain. Just draw it, and if it's there, it's there. If it's not there, it's not there. So another way you can use a trend line is to confirm a trend change in the market. For me, how I get my entry, I use trend line, I use support and resistance. So this is the secret I want to share with you guys. And I hope after this class, you guys will watch this video again and learn how to do your top down analysis. Very, very important, and know how to use them to get entrance in the market. So on on the higher time frame, we have a downtrend. We have a downtrend. The trend has been moving down. Like I told you, minor structure and major structure. This is a major structure, and this is a minor structure. For me, this guy is a minor structure. All right. So if we scale down now to the 4 hours, we will see that this guy is an uptrend. Is trending up. So let's go to the 4 hours. P, abeg get me water there, abeg make I drink. Man, to talk no easy o, na now I see wetin teachers dey pass through when dem dey try to teach. So let's let's go to the 4 hours and see what is happening here on this guy. Now, thank you. Um, like I said before, like I said before, I showed you the minor structure and major structure, and I said I want to see anything that will make me not to be able to sell, not to be able to buy from this particular point to this upside, which I found something here that will make me not to reach up to this upside. So I won't be forcing myself of buying from this downside again to this upside, except the price break this place and break this particular place. Then I'll be looking to buy to this upside completely. All right. So now this place is a down, is an uptrend on the 4 hours, but is a minor structure. This guy is a minor structure. Here is the uptrend in the minor structure. We want to use trend line to confirm that this this small uptrend now is already over. We are now going down. We are now going down again because the price now has come to this trend line, and with this trend line hold this price, trying to force this price down to this downside. So to confirm that, to confirm without guessing, let me say to confirm without guessing that this guy now, if e reach here, e go break up, e go start going up. To confirm without guessing, we have to look for a way we call trend change. Trend change. Trend change. So we use trend line. I use trend line to confirm that one myself. Some people use support and resistance to confirm it. I will also show you how to use support and resistance to confirm it. I will also show you how to use trend line to confirm it. So let's scale down now to the 4 hours to confirm if this place will break down to the downside. So we are now in the 4 hours. Let me zoom out. In the 4 hours now, you can see it's a good uptrend, and people have already bought this market. They already bought it. They bought it, and now they are making profit. They already bought it to this upside. They've made profit already. So for we now that want to sell, let's look for a way to sell. If you watch here now, price has created what we call double top for us. This pattern. You remember this pattern, right? Okay. Okay. Price has already created this pattern for us, and this pattern is a reverse pattern in the market. Is a reverse pattern in the market. So for me, I want to confirm if this uptrend now is over. I will take my trend line again and plot from this place like this. This trend line is not supposed to pass here. So that point I put it from the beginning point is not an accurate point. So I'll put it from this particular guy now. This particular point, then take it to this guy. So if you, sorry, and place it like this. So if you watch now, if you watch, price has already broke down of this trend line. It has already break this trend line with a momentum candle and retest the higher time frame trend, and now it's trying to come down. So if you want to jump in on this market now, you to confirm with your support and resistance, now you will carry your line and draw it like this now. Do like this, put it like this, and wait for price now to do this stuff like this, then pull back to here. You will see the price start going down with no stress. The price will just fall back to this place, and then you make your money. You see it? Your stop loss will be in this zone, in this zone. All right? Your stop loss will be in this zone, in the sense of take your short position, put it here, target this low, this last low, this point here. You target it here, and then you take your stop loss now, put at this point here. That's your stop loss. Mr. Easy, are you seeing it? Okay, so ask your question. I'm here to answer you. We have enough time. Let me see if anybody dey come. We are just three people, man. I believe maybe the other guy has network issue, but ask your question. I'm with you. Ah, yeah, yeah. Mm, yes, yes, yes. That's what I said. And um, like I said before, we have what's it called? We have chart patterns. We have chart pattern in the market. So I showed you a chart pattern. I showed you a chart pattern. This one, like this. Let me approve somebody. Madam, mute yourself. Mute yourself, please. Mute yourself. You sure you don't call now? Sure you go rest now, abi? You're welcome. You're welcome. So like I said, we have that chart pattern. Let me bring back the chart pattern. We have this chart pattern already. This chart pattern is an history that that has already been made. People have already studied it, and it tells them something in the market. When they see this chart pattern, it tells you that the market is about to reverse to the downside. So you just have to wait for the market to clear the head of this, that's the shoulder of the chart pattern, before you confirm it as a good entering point. All right. Please mute yourself. If you dey noisy, please. I can get myself echoed. Myself is echoing from my own end. Okay, everybody mute. So um that's that chart pattern for you. So the fact that the price has already come. Okay, let me see. Yeah, I can hear you. I can hear you. Let me bring back the chart pattern. This chart pattern is a history that has already been that's has already been verified, that whenever this chart pattern happen, it's a complete downtrend. It's a complete downtrend. Depending on the time frame you see the chart pattern. If you see it on the 1 hour, you know it's a downtrend. 2 hours, it's a downtrend. 30 minutes, 1 minute, it's a downtrend. But you don't know how long the chart pattern is going to play out. So you just have to watch out for a possible way to just take your money and just get out of the market. And if you watch here now on the 4 hours, we have that chart pattern here. On the daily time frame, I showed you twice the that's twice the top, which literally tells you it's a reverse candle. And that twice the top happened because of this chart pattern on the daily. That's that 8 hours. That 8 hours. Let me go back to the 8 hours. So that 8 hours, the twice the top tells you that yes, that chart pattern literally happen in the market. The chart pattern form when a reversal candle is literally playing on a higher time frame. So that was what the twice top tell you. And again, let me make something clear. To get a good point for entering, you can use your Fibonacci. Either use the 61.8, or yes. Okay, Fibonacci is a retracement tools that is being used to get a particular point where price can retrace from. Let me add the guy here. Okay, I've add the Fibonacci. So it's a retracement used to know where the price can possibly reverse from. So if we scale down to the 4 hours, if we scale down to the 4 hours, that's to the 4 hours, we have that Fibonacci 2 in the sense of you will draw a particular point to a particular point to get it. So to use a Fibonacci 2, you draw from the beginning of the Fibonacci to the ending point of that that's of that in plus years of that trend. Like if you have read your market structure, there's what we call impulsive and retracement. So here, don't mind my chart, it's very cluster now because this is analysis board. Analysis, you don't expect it to look beautiful, it must look very, very rough. So this is an impulsive move. This is an impulsive move. And this is a retracement phase. This is a retracement phase. So when you see this when you see it like this, you know that the price has already make a high move, impulsive move, and now it's making a retracement. So to get that Fibonacci that will help you tell you where the price will possibly reverse to, you use this your Fibonacci. I'll be teaching this Fibonacci maybe in our next classes or something else, how to use it. Although let me put on the reverse sign. So what we use in the Fibonacci is the 61 and 50 percent retracement. If go above that 50 and 61, that's a deep pullback. Is a deep pullback. So if you watch here now, we have the 61 and the 50 Fibonacci retracement, which price reacts to the 61 and 50. Don't mind the color. I don't know how to take comot this color, but I go take time arrange the color and do the okay. Let me make the text bold so that you guys can understand what I'm trying to say. Yeah, please hold on first. Let me see how I can make this. Oh, what's going on? Fibonacci answer now. Okay. Use background. Kind. Good. 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 Um, I'm coming. Oh, just wait a minute. I want to make the test or the level board. Okay. Okay. I don't see how to scale the stuff, but it's okay. So the price now is reacting to 78 and 61. That's a deep pullback for you. That's a deep pullback for you. After this class, right? So that's a deep pullback for you, and which happens within the trend line. And again, we have this place that has already been broken before as a support and now acting as a resistance. So the Fibonacci gives you accuracy to your trading analysis. All right, it gives you that trading analysis accuracy as well. So having said it now, we now have that mindset that this price will reverse down. The price will reverse down, and which the price now has already showed that sign of reversing down completely. But why I will not take my trade from this point is I'm not that expert enough to take that trade from this point. Alright, the way I was taught is you allow the price break the neck before you take your trade. But people who are experts, who understand full outflow of market structure, has already taken their sell position from here. in the sense of this dodgy candle. See, remember, dodgy candle is an indecision candle. So they've already understand that this dodgy is an indecision, and what they are waiting for next is to see a bearish presence, and they will take their trade. So some people have already took their trade from here like this now, at this particular point now. They've already, as this market close, they've take their trade and then they put their stop loss like this, just below. They are take profit now. They are getting good risk to reward on this trade, because why? They are not late seller. They are not late sellers. But we now that is entering from here, we are late sellers. Alright. So when we enter from here now, we will make this point an order block for us, in the sense of taking our stop loss higher, then counting this place out as order block. Order block, you will learn order block for market structure, and I will teach you order block later, maybe after we read your market structure. Then we will target this low for us. So this is the way we get our entry and our trade. So this little idea that I've shared with you guys will enable you to start analyzing the market and know your possible means of entry. Let me tell you something, how fake out work out. Recently, I found out that if a fake out wants to work out in the market, is because we are not patient. That's why we get that fake out. So this is a secret I'm trying to show you guys. Alright, I'm trying to show you guys the secret. When I was analyzing, hold on, I will leave this chart first, then go to SA Good. You guys are seeing my chart, right? You are seeing it here, right? To black, okay, to black. So when I was analyzing gold, I found something. I found something very interesting, and I entered this trade based on confluence and confidence. I told one of my friend that if gold will give me, I'm expecting now from this point now, I entered from this particular point. Hold on. I entered from here. Oh, God, wetin dey worry you? So I entered from here, this particular point. This red candle took me in with let me hide this guy. Okay, I entered from this particular point. This red candle took me in, and I started seeing a rejection to the downside. I was literally scared. Then I told one of my friend that omo, it's like I want to hit stop loss on gold o. So hold on, let me accept somebody's request. You're welcome. You're welcome, bro. So I told myself that gold will take me out very soon o. So the guy just told me, you know what he said to me? He said close. I opened two position which supposed to give me like hundred and something dollar in that two position. If gold should have run from this place to this point, it will give me, let me put my calculator, my pips calculator. So what I was expecting from gold is 2,800 and something dollar. That is about 200 and something dollar for one position I opened. That is 100 and something dollar for one position, 100 and something dollar for one position, and that is about 200 and something dollar. So the guy just told me that, man, you know that you're in a stuff, that is in a challenge stuff. If you blow this account now, man, you're gonna regret this. So close one position of that gold, allow one to run, and which I just like I conclude. So it was like telling me that, you see this place, this line here, it will affect your trade. Gold might pull back from here and then break this your trend line, and you will see a stop loss. I said no. I was confident with it, and I said no, my trade will go my way. It will hit this particular point before I see that rejection, or even close above this guy and started rejecting. And if I see a close above this guy, I will be very cautious. I will stay with my phone and start watching if this place will hold. If it not hold, I will just go with the little profit I get from gold. So how I entered the market, I saw that this point was consolidating, this full point here was consolidating here like this. You guys are seeing my mouse, right? You are seeing my cursor. Okay, so I saw that this place was consolidating. It wasn't moving up, it wasn't moving down. So I said, I won't buy from this place, I won't sell from this place. I want this place to close, in the sense of watch this place, and I mark it X. This X means is a phase zone, is a phase zone for this gold. This gold will break it out. Then I said, if this gold close above here, this line, I have a close above that line, I will buy gold. Then I have to tick the complete wick of that candle. I tick it out, then I place it out there. I said, if I see a close on this point, I will buy it. And eventually that close came out. Let me zoom out so that you guys can see it properly. I started watching it from the 1 hour because 1 hour was my entry. Then this was what happened. This candle tried to close, e phase, e push inside. I was patient. Then this one came in and started pushing, 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 push out. It came back and closed above this candle. Then I placed my buy order. I just placed it. Then I left the market. I put my stop loss. I brought out my stop loss. Let me bring back this guy. I brought out my stop loss. I set it that way. Remember what I drew here? I said here will be your order block because you entered late. Then you make here your order block, make here your confirmation, and which was what I did on gold, which here was my entering, here was my order block. Then I put my stop loss below it a bit. This is about 3 raised to 43, in the sense of if I draw this guy down a bit, I'll be getting 3 raised to 1, but I don't want to get 3 raised to 1, at least 3 raised to, at least not a high stop loss. Then I just position it on that point. Let me get back my stop loss. Okay, so I just position it on that stop loss, and gold started going up, came in profit, went back. This was a retest, a first retest from a bullish rejection. Then I said, okay, I did not wait for break and retest, but let's us see how it's going to play. Then it came in again with another bullish movement again. It was a bit low, entered, and then I closed that first position I opened. I closed it with a 0.39 profit, which is not even up to one profit. Then the market started going down again. It started going down, taking me back in loss. I was like, man, I think I fucked up. I did not wait for a proper rejection. And I look again, I saw this, I remembered I drew a trend line. I drew a trend line. Yeah, I said yes, I drew a trend line from the 4 hours, and which this was a trend line. Like I said before, if you are drawing your trend line, do not stretch it. If it's there, it's there. If it's not there, it's not there. So my chart is very clustered because of too many analysis and other stuff. So when I drew this trend line, you can see from the starting, I drew the trend line to touch this particular point and to touch the last OB. So I said, if this market will come on this trend line and this trend line did not hold, I will close the trade. I will go with my loss. All right, that was what I said. So I started watching this chart from my phone. I started looking at it. So when I saw that price came in with a bearish candle and was trying to push below this trend line, failed to push below it, closed with a pin bar, I wanted to open another position. Then I said, no, I might be over leveraged on this market. Let me allow the one stuff to run. And literally, when I checked towards the evening, I saw that yes, I'm in a profit. And the zone that my friend was telling me that this price might not break this zone, and you will see a bounce. It was telling me something like this: if price pull like this, and then I will see that bounce to my stop loss. You understand? So that was what he was telling me. So I said, no, this zone is not a strong zone, it's a minor zone. Price will react to it just a little bit and I will see my push to the upside. That was how I analyze this gold, and price literally want to break it. If you watch now, price has already come in with a high momentum trying to break this zone, and if price break above now, I won't be opening more position, rather I will allow that one position to run to this take profit. So that is a secret on how we analyze the market, looking it in another dimension different from the way you see it. But with these few ideas that I've already showed you guys from here on how to enter, it will give you edge now to know how to enter the market. There is no perfect entry. Let me tell you guys, there is no perfect entry. There is no perfect entry. Any entering you do is entering. That was how you saw the market. That was the reason you take that trade. So, but if they ask you, why did you take this trade? You have to have a reason for saying this is the reason why I took this trade. So, I've shown you guys now an easy way you can use trend line to take a trade without you being caught. The only way you can be caught is when you go against the take profit zone. So, let's say for instance now, I was to ride on this trade. I was to ride on this trade. Like I said before, I said you will take your you will enter from here, then you will target this last high here, right? That was what I said. Then your stop loss will be either above this guy, right? That's what I said, right? Okay. But that is not the right way to ride on this trade. Why I said so is because in a normal circumstance, if you look on this trade, you're having a two raised to that's 2:1. That means if you look on this place and this place, it's 2:1 in the sense of you are risking 1% to get 2%. So it's very, very cool. All right, it's very, very cool to ride this trade. What if you have been riding this trade now and the trade now came to this particular point and e hold here, price hold here, e reach this point and then you see something like this, boom 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 boom, back to your stop loss before coming back again to your take profit zone. How are you gonna feel? You're not gonna feel happy. Yeah, you're not gonna feel happy. You're not gonna feel happy. That's why it's very important when you are riding a trade, stay at alert. Watch your potential zone where you can easily get out and easily allow it to run if possible. Because why I said so is because this particular point is an order block, that can possibly hold the market. That's why I said it's very good you wait for a retest. When I drew this guy, I drew something like this, that this trade, I will wait for it to do this kind of thing before I start riding this trade. So that was what I said to you. And if you remember, I drew something like this. If you're going to watch the replay of this video, you're going to see it there. I think we have spent an hour here. So when this particular place is broken, I'll wait for a pullback in the sense of this market will tap on this guy. It will tap here. It will tap here. If the market tap here, it's trying to tell us that this place is a fair zone, just like this one is a fair zone. This XS I put here is a fair zone, that it will no longer hold the market to not move to the downside. Um, to not move this market to this downside, then you just have to wait for that minor retracement. That's this point. If you can't get the retracement, you can use your Fibonacci, and put it here, then put it like this. Then where you see the 61 or the 50% Fibonacci, you draw that zone outside like this. You just draw it out, then mark it out like that. So on that place now, you'll be watching what will happen. It's either you're going to get a good uptrend when you scale down to, like, let me say 30 minutes. You scale down to like 30 minutes. Hold on, we are trying to load this chat. To be very honest, to teach no easy. To I no go lie you, water wan finish me. I pray my fit sleep this night. I will please tire. um so you're welcome. So you're gonna see that perfect uptrend, but is a short term. Then you take your trend line, plot it like this, wait for that trend line to break. Once e break, enter. Once e break and close, there is a candle that close above it, just enter. Then now you have a good risk to reward in the sense of your stop loss. Let me clear all these guys. Back to the 1 hour. Sorry, back to the 1 hour. Una no dey show me Tinubu again because I dey invest for una. All Nigerians, all the INEC chairman I dey invest for. So sorry guys, sorry I had to interfere with politics. I like politics though. So you'll be getting a good risk to reward in the sense of now you can now draw your stop loss down to this point now. Here will now be your order block. Then you'll be targeting this low. So you see that you have minimized your risk but getting a good risk to reward on your trade. So you will still be active and observing on the right hand side to find your exit. Like at putting your exit here is not the right way to put your exit, because I won't advise anybody to put the exit at this point. You just want to get out from the market very fast. That's why you see most of us now, our trade does not hit take profit anymore. It's because we are looking for a bigger profit zone, and which is not really good. If you are a smart guy, you will target this place, this particular place, and start watching all these guys. There are other blocks around this zone, this place, and started watching it as your take profit. Here if I will do my own to this point, I will say here's my take profit. Then I will look come to here again, another zone for reaction. These are zones that will react in future in the market. These zones are zones that will react. So if you see me now, I started drawing all this line on my trade. I'm trying to tell you that if you are comfortable riding this trade from here to here, it's cool. But if you are not comfortable and the trade started running and it goes to this point, you see a reaction, you can move out from the market. You get to this zone, you see a reaction, you can move out from the market. But if you are bold enough and you have the mind to hold the trade from this particular point to this point, you are cool, you will get the full profit. So this is how we traders we think. Now I'm not using support and resistance at this point. I'm using the smart money concept in the sense of using an order block for reaction when I will see. So those reaction now will possibly be like this. Let me show you the reaction I'll be expecting. When I enter from here, I will see a first reaction from here like this, and then a pullback, then move again, a reaction here again, move again, a reaction again, move again. Then that move will particularly be to the downside. So if you don't have that mind, when you see this reaction move to this side and then the reaction move again, your mind will be telling you that, oh, this price is going to do something like this, so maybe just move now back to my take profit, stop loss, and I'll be lost. So it's better you just close your position, close them, no stress, just close them. When you see this reaction, you close all of them. So if you understand this move, I don't think we'll be in a loss in the market. But it's like I said, trading is very easy, but it's the most hardest skill to understand. Very easy, but the most hardest skill to understand. But if you understand the skill, I bet you'll always be in a profit. You will always be in a profit. So I believe I have shown you guys some important aspect of trading, some vital places that you have to touch when you want to learn trading. Like what I will advise you guys right now is, after this class, you want to watch the replay. I already create a YouTube channel. I'll start posting there for the YouTube channel. And the YouTube channel is gonna be, some videos are gonna be private, some videos are just still gonna be for public. So it's just a way to just grow the social media handle, right? That's the what's it called? The YouTube channel, right? That's just a way to grow it. The private videos link will be shared to our WhatsApp group. While the ones I'll be posting on a free content, it's gonna be just helping to help people finish. So more strategies and more techniques are coming in, which I will be expecting more feedback from you guys. So whenever mentor say do assignment on this pair, please do it. It's very, very important. All right. It's very, 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 very important. So we just analyze on VS30. I don't know if we're going to see the outcome because this pair does not save chart. All right. It does not save chart, but let me see if I can do a save and let us see the outcome. If what we analyze is what we're going to see later in the future. Okay. VS okay, student analysis. Are you guys there? All right. So we're gonna be diving into forests. Let's do some. I don't know if I. So I believe the thing has already saved. If possible, let's see. Let's dive into forest and let's just play again a little bit on forest. So now we are in a forex trade. I analyzed crypto today and I was hoping to see the outcome, though I wasn't intention to I never had intention to trade crypto. That is Bitcoin because it's just very, very cluster and stupid. Today, Bitcoin is just very cluster and stupid, no volatility in the market. So this was the analysis I did on um let me go to the 1 week. You guys can see my chart, right? Are you guys there? Okay, right. I'm good. You guys are there. I think we have one female that just entered. I don't know if she's talking. Suni Mary. Hello, Mary. Today now I don't catch your real name. So I did this analysis on I think today in the morning. So I was trying to play around with the SMT, that's the smart money concept. So literally with chart pattern as well. So all traders use chart patterns. Don't mind anybody that will tell you that I don't use chart pattern. Chart pattern is the main structure of trading. So on the weekly time frame, I find something very interesting on the weekly time frame, which I'll call Fair Head and Shoulder. The if I was in the Bitcoin market when this guy played out, one Bitcoin is about around what's the price around that time? Okay, 46,000 dollars. So imagine say I dey market, I come dey use $1,000 account dey trade Bitcoin that day. Omo see money I don bank go reach here. Enough dollar because nothing to hold the market. The market just run down to this particular point, this other last block and started consolidating here. So when I came in, I just saw it. I said, any possibility is for this market to either buy or sell because I already got you my support and my resistance in the market using top-down analysis. So I found out that yes, one touch, this supposed to be a touch, but did not get through it. And now the price broke out, and I said, okay, here is now acting as a resistance. Then I came back, I said, let me look for support. I look around the left, no chart there. Then I look at here, one touch, two touch, three touch, and now it has broke in, acting as a resistance. So let's see if price will. I said to myself, if price will do something like this, that means we have a good resistance in the market in the sense of Bitcoin will move to the upside, then hit this particular point now, acting as a resistance, and then move down. Then I just mark it out. I said, okay, this is a nice point for me to start looking for multi-time frame confirmation. Then I started diving to the 1 hour. Let me use the normal stuff. I started moving to the 1 hour. I moved to the 1 hour. Then I found things more interesting on the 1 hour. I started looking out for chart patterns. I started looking out for chart patterns. Which chart patterns? Let me tell you one thing about chart patterns. Chart patterns are history that a lot of traders has find out in the market that this thing happens in the market often and often. And when these things happen in the market, it tells us where the price is potentially going to run to. So there are different type of chart patterns, but as a beginner, maybe next Saturday, please someone should remind me. We're going to be talking about those chart pattern because as a beginner, you have to know it. It works in all time frame. When I started trading, if you are old in the trading community, you can remember when I started scalping, I started using chart patterns. And when I just say this trade is running to the upside, you will see the trade running to the upside. When I say the trade is running to the downside, you see the trade running to the downside. All those strategy was chart patterns. I was using chart patterns at that moment, and my strategy was working very fine. And I'm still using those strategies till now, those same chart patterns. I learned that chart pattern from a guy called Kojo Forest. The guy is a strong guy in trading. When I went to his YouTube channel, he showed me chart patterns that as a beginner, you have to know those chart patterns. If you don't know them, you are lost in the market. Anytime you see them, you are lost. So I started mastering those chart patterns. I started working on it, pushing effort, and finally, when I see them playing out in the market, I know that yes, this is what the market is literally doing as at that moment. I will try to follow them in their direction. So when I scaled down to the one day, I found the chart patterns. I saw this rising wedge. If you are with if you have a pen there, okay, you know what will happen right now? Let me You can see my chart now. I've just opened a new chart. All right, so let's type chart patterns, and there are a lot of chart patterns, but you don't need to master all of them. All right, don't know their name, but just know when they form. All right, so let's use online to search for chart patterns. So you see them, chart patterns. All right, chart pattern, chart pattern. You can see my Chrome, right? You guys can see my Chrome, right? Are you guys there? Okay, okay. It's blank. Let me see how I can share the. Okay, you can see where I open chart pattern, right? Okay, I want to make it bold so that you guys can see it very well. So this was how I started. All right, so don't let anybody deceive you that you can't do it. You can do it, despite the fact that we call you guys to come in, pay to get mentorship. We all started from somewhere. This guy is not opening. I want to make this guy bold for you guys to see. Open in a new tab. Just wait a minute. Oh shit. So this is all about trading. Trading is idea and it's knowledge if you follow the rules. I want to open one particular one. May just open wide so that you guys can see it. Let me see if it's something. It's taking me to a website. I beg. Image. Okay, let me click on image and let's look for chart patterns. Chart patterns. Mary, Abi, what's her name? The only lady in the group right now. You can see chart patterns now, right? Oh God, why take me come here? Why be say no dey show me? Okay, 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 okay. We have them here. No, no. Let me download it out now. Let me. The best way is to save it and show you guys. So guys, don't be offended. It's all learning materials and we must learn them. If you don't know chart pattern, you are lost in the market. That's the truth. So I hope the chart pattern view is showing now. You guys can see the chart pattern view. You can you can see it, right? Okay, good. That's very nice. So you can see the bearish double top I was telling you guys. These are the ways to confirm the chart pattern. These are the ways to confirm the chart pattern. So let me explain how the chart pattern works. This bearish double top, it tells you that the market is coming from an uptrend. That's this leg. The market has been coming from here. So the market failed to create a new higher high and then break the last low. Then you as a trader, you don't need to just because you see the market break the last low, you just jump in. If you jump in, it will take you out. So you just have to wait to see if this second leg, this leg will form. So this leg now started forming. Hello, if you're in a noisy place, please just mute. All right. So this leg now started forming. So when this leg form now finish, you don't need to jump in. If you jump in for a sell, you might be surprised the market will create a new higher high. Allow the market to break this last low. That is this line they draw for you. They draw this line for you. Once the market break above, this green line is your new impulsive move, and which was literally happening here, which I said it has already happened here. Just with, let me show you guys on where is our I think I already take out. Okay, I draw it for you guys. Okay, not this guy, but let's still keep on talking. So this was the move. So you enter from this place, you target this last low. So that analysis we did, we have this move there, we have it there. So you'll be targeting this last low. This is called double top. All right, and this is another head and shoulder, in the sense of the market is coming from an uptrend and then create a shoulder, but you won't jump in because you have to wait for the market to give you that confirmation that this is what it created in the market before you enter. So the market now, if you watch now, this market now break this last high but fail to create another higher high and then move down again to this same last low and then pull up, fail to break this high, then pull down. You will enter from this particular point once you see the break from this particular point and then target this last low in the market. That's how chart pattern works. And many traders, even me, mentor, all of us that are successful in trading, we use chart patterns. We watch out for them. They are the master game of trading. If you don't understand it as a beginner, you will turn around in the market. You will just be turning around. Either you be in a loss, in a profit, loss, or in a profit. Again, now we move now. Another chart pattern. This is bearish rising wedge. Fine. I think that's this guy. That's this guy. Rising wedge. That's it here. You can see my chart, right? You guys can, okay, that's this is a rising wedge here. If I scale down to the 4 hours, you will see it's very beautiful. It's very beautiful. Why I say it's very beautiful is that it's very cool to spot. These things I did here are all chart patterns. All this channel, this is a channel. If you watch, is a channel. And look at the rising wedge here. So let's look it from a perspective for drawing. Now let me put a drawing tool. You can see it now. It's a drawing tool. So it's a rising wedge. If you watch this place now, it's a rising wedge. And this price was coming from an uptrend. If you watch from this point, and if you watch this my chart, hold on, it's coming from an uptrend now. This place, you can see it and started entering the wedge, started forming the wedge, before it break to the downside. All right, so the same thing happened here. It started coming from here, entering the wedge, before it break to the downside. Are you seeing it? So so this is what you have to know as a beginner. All right. I won't be talking much on these things. These are the ways you analyze the market, but you have to still know your top down analysis. All right. You have to know your top down analysis. So welcome to the Favolier FS community. Welcome. Easy wey say you never read. Easy you go read na your head, your back of the head go dey pain you. I got you. I got you. So for you that is complaining about reading, now you will sit up and you will read. You will try to practice, you will try to master, you will try to understand. The thing about trading, alright, okay, okay. See, yeah. So what I'm trying to say now is the ability of me showing you this patterns doesn't mean you will still be profitable if you do not study it from your end. Let me tell you what I can only do for you and what God can do for you. Even me as a man or anybody, today one of us was like calling me, telling me that he wants to go and he wants mentor to teach him one-on-one. The truth about teaching you one-on-one is not the problem. Even me, I can come to your end and teach you one-on-one, spend 10 years teaching you. If you did not train your eye, the thing about trading is your brain and your eye. To be very honest, I'm in a challenge right now. Right now, I'm in a challenge. The day I started that challenge, my psychology messed up. That's a devil's work. I started having issue with my brain. I couldn't sleep. I did not tell anybody. I couldn't sleep. I'm just telling you guys now. I couldn't sleep. I couldn't think straight again. When I'm just opening my chat, everything just like my back of my head, I'm feeling that pain. I'm feeling that stupidity. I'm taking trade anyhow. So I called one of my friends that makes me to learn trading. I called him. I said, "Guy, see, I'm on a challenge right now. Huh? I just start the challenge. I haven't meet up with $100 on that challenge. I'm to get $400 before I pass the challenge. Then the second phase will start to aim something." So the guy said, "Favor, calm down." He knows I can do it because I was in a challenge last month with $1,000. I banked about $28,000, but I didn't post it on that group. I didn't post it. I only showed mentor. So some of you that are sending stuff to mentor or posting on the group there, 2,000 profit, 3,000 profit, those are demo profits. But the only way you get emotion in the market is when you start risking real money. When you start risking real money, you get emotional in the market in the sense of when you lost, if you can control your pain, that means you are king in the market. But if you can't control it, man, forget about it. You are not a trader. You are not a trader. So a plan was to fish out something for me to start earning, but they tested me and which I passed it. A week I bank about $28,000. I showed him, I said, your challenge, I don't pass am o. He said I should bank $5,000, let him see. I banked $28,000 with dis chart pattern, and the type of chart pattern I even use was dis flag, dis flag. I use it on gold. I trade dis chart pattern on gold with a high risk loss size, I swear to God, because I know dat dis chart patterns they are hundred, they are like 98% or 99% accurate, but if you follow the real step of how the chart pattern works. So I banked that money within a week. I was trading only gold. I was trading only gold because the chart pattern was still in play. I traded it, I banked that 28. He said, favor. That was what Mentor said to me, favor. You just want kill the market. Now small, small. I know it was small, small, but I was like, I told him, I said, my analysis was correct. My accuracy for that trade was 98. He said, okay, what if the market goes against you? And that was true. If the market goes against me, that $1,000, e no even reach 5 minutes for the market to liquidate me. You understand? But the truth is that when your analysis is correct, it gives you edge to trade more in the market and to do whatever you want to do in the market, but follow proper risk management. So back to what I was saying. So I told that my friend that my psychology has messed up. Oh. Please, I'm in a challenge right now. I would like you to help me start following up until give me a week or 3 days to 4 days. Let me recover my psychology back because now I'm not thinking straight. I was scalping. So all the trade that I take, if I go in profit, I will go in loss. If I go in profit, I will go in loss. If I go in profit, I will go in loss. Sometimes I even lost everything. Small time again, in a 5 minutes, I will gain them back. So I said, this is not my trading strategy. That was what I said to that my friend. So he called me video call and was like, eyes came to Delta State. I sat you down. I showed you some stuff. Why are you taking more than what your brain can carry? So I said, bro, I just want to be great because now I'm trying to build my empire back. So he said to me, sit down, give me the login, 3 days. Then once you are good to go, I will allow you to log in. Then we'll start handling the account together. Currently, I am the guy is handling that account, but I'm the one bringing out setup. I'm the one bringing out trade. Then if I send to him, if he do is a review, he will tell me take this one, take this one. That's how we've been doing it now. But my psychology now is now back to normal because I had to use that 3 days to re-strategize myself, go back again and start learning. Because why? I've been on Twitter for months now. I've been seeing different type of setup, different type of trade, different type of analysis. Some people use indicator, but they won't tell you, they won't follow, they won't talk to you. When you are watching their type of trading, you get messed up with your own. You feel like your own is not accurate, your own is not working, your own is not even good. Then you get messed up. That was what happened to me. Even mentor told me that Twitter where you dey go, e go burn you fire, no worry. And true, the Twitter burn me fire. E burn me fire 3 days. 3 days my brain was mad. There's one guy I'm following on Twitter. The guy is a good scalper. 15 minutes, 5 minutes, just scalp and take his money. He's out. But I want to be like him. It takes time. It takes time, bro. It takes time. Some takes a year, 6 months, 3 months, 4 months. If you find somebody who is ready to hold you hand to hand, even if it's via online or face to face, as long as you are willing to learn, you are very fast with understanding, you will catch these ideas. As long as the person provide you with informations, vital informations, you will catch them very, very fast. You will catch them very, very fast. There are some people here in this life, I send them links to YouTube, go and watch this video, go and watch video, and they just feel like they want somebody to come and teach them, hold their hand, or come and teach them face to face. My sister and my brother, if you are that type of person, nobody will spoon feed you as long as this life is concerned now. Information is free. Information is power. Information is knowledge. Once you see somebody giving you that information, just take it. Try as much as you can. Work from your own end. It took me months to learn these chart patterns. It took me months to learn them, to see them playing live. I will know that yes, this thing is playing. I will know how to follow them. So now I've already showed you guys on this section, and I will still send the um the the picture for you guys in the WhatsApp group. What I expect you guys to do is go on your chart. Just first of all, grab these first 4 lines. How many here? 1, 2, 3, 4, 5. Okay. Grab these first 5 lines. Just grab their drawing. Then draw them out when you see them playing. send on that group, and we will do a review. The type of chat pattern, ask question, draw it. What type of chat pattern is this? Person will tell you on that group. What type of chat pattern is this? Somebody will tell you on that group. When you are able to know them, my sister, my brother, trading will be very easy for you. That's trading for you. When you are able to know what is happening, trading will be very easy. Even if you don't know how to use a smart money concept, SMT, SM that, SMDs, if you know this chart pattern, you are 30% good in the market. When you combine your top down analysis, you are 80% good in the market. When you combine your trend line to each join, you are 90% good in the market. You are good to go with trading. Finish. No other thing, no other concept, no other magic, no other blueprint, no other fucking shit is added. Just know this few knowledge that I'm sharing with you guys, and every other thing becoming very easy for you to understand. But read your market structure, read those PDF we've sent you, read those books. Any book I sent you, read them. If you understand the chart pattern, the books, they will make everything very easy for yourself. If you understand the chart pattern, those books will be very, very easy for you to know that yes, this thing is playing out, this thing is happening. Then you won't be a novice again in the market. When somebody send his chart on that group, you will just take your eye and look. You will find one or two things you know. Then you will know what that person is trying to interpret with his chart. So guys, please and please try to understand this concept. Meanwhile, let me check if market don open. I get trading I dey follow up o. Make I no go forget myself. I'm following up with gold. Okay, gold don okay na Bitcoin. So once gold open, I'm trying to take my trade to break even. I'm in a $20 profit. They never open. So not to lose the profit and the challenge, we pray by God grace we win it. Only few people understand what is going on in my life. So despite the fact I'm saying it to you guys, I still want your progress. We are all here to make money, nothing else. We are not here to beef anybody. We are not here to say this guy is making money more than me. No, we are all here to make money. And if everybody is making money, our life will be very sweet. No winch again. I no believe say winch go dey if everybody dey happy. I don't believe that there will be a winch. So you can see the chart pattern here. Okay, let's look out for this chart pattern here now. This is a falling wedge. Oh. So let's look out from here. Show, you can see a falling wedge here. Can you guys see the falling wedge? Hmm? Look at the chart pattern here again. Yes. So these are all confluence to add to your trade. So if you understand all dis thing, I no believe say me and you go dey stress again dey trade o. We go just sit down and start looking out for what is important. We won't be focusing on all these guys here to trade. We won't be focusing on them again. So somebody is requesting to join. Abi? Okay. The person has already joined already. So I believe we are 5 now. Who is that? I don't know. Okay. But no problem. So nevertheless, I believe I have shown you guys some few secrets. Let me see if I can drop it on the group, the chat patterns. Please excuse me, I need to pee. What time frame? Okay. Please, if it's Mary Abi this thing, I will answer you on that one. Okay. Fibonacci can be used on any time frame depending on where you are waiting for the retracement to happen. All right. So you guys should take this, study it as well. Abeg una wait for me, I wan ease myself first. I'm not feeling it. So we analyze another pair on currency. Yeah, I'm back. I'm back. Yeah, yeah. Thank you so much. Thanks so much. So, let's do analysis. So, I've sent you guys this stuff now. What I will expect you guys is to go and practice it, and let's do one more top-down analysis on one pair, and then we'll call it a night. All right. I believe this week is blessed if we try to study all what we have been teaching here. So for me, this gold, I believe it will break to this upside. What I'm saying right now is to mitigate these guys or this particular play, but I don't want to be selfish or greedy. So I've watched out for my potential profit zones and where I am most likely to take profit once I see good getting to that point. I think I don't even almost analyze all the markets finish. Let me see if I have analysis here. Still loading somehow. I think I've analyzed many pairs. Okay, okay. I did analysis here again, sef. Okay, for a sell, I did analysis here, and this pair is gonna sell. Let's just watch. Arrow JPY. I don't want to claim my analysis. That's why. So let's use Arrow J or Arrow USD. I had analysis here too. So I'm just looking for something that I will just okay, I have analysis here already. I did not take the trade because I was a bit late, and there's a chart pattern here. Okay, mentor talked about doing analysis on this chart, right? He said assignment, do analysis on SA, good and this thing. So this is the analysis already playing out. But on God sha, let me look for the one I did not analyze and let's just do one analysis. Then we'll call it a day. Oh, all this pen and paper I not like. Okay, I don't do analysis here again. Look at another chart pattern here again. You can see it rising wedge. So all these are chart pattern that you find in the market. They are mostly happening just for you to understand it. So let's work on this guy who sent me message. Let me from here check. My wife don't dey disturb me to come chat to my girlfriend. Abeg baby I dey let your first if I dey true. So we'll be using the weekly time frame, alright. So we'll be using the weekly time frame. Like I said, if you want to do your analysis, let me say this out. If you are a day trader, Mr. Easy, you have to know your type of person you are. If you are a day trader, if you are a swing trader or you are a scalper. So these are the time frame for. Please remember or take book and biro and write it. If you are a day trader, your time frame shouldn't be. Somebody is requesting to join. I think so, or somebody just enter. Okay, Liz, okay, you just entered. So if you are a day trader, your time frame is your higher time frame should be the daily, the 4 hours and the 1 hour. Can you hear me? You can do your analysis on those time frame. Alright. Your higher, if you are in a noisy place, please mute yourself. So your higher time frame should be the daily, the 4 hours and the 1 hour. Your entering time frame should be the 30 minutes, 15 minutes and 5 minutes. You shouldn't exceed more than those minutes. Alright. Your higher time frame should be the daily, the 4 hours and the 1 hour. Your entering time frame should be the 30 minutes, the 15 minutes and the 5 minutes. These are your entry time frame. Or the 1 hour, you can probably use the 1 hour as your entry time frame as well. It's advisable, yes. So if you are working on your analysis, work on the 4 hours if you are a day trader, on the 4 hours or the daily time frame to get your analysis. They are all right. While if you are a swing trader, your higher time frame should be the monthly, the weekly and the daily. Your entry time frame should be probably the 1 hour, probably the 4 hours, the 1 hour, or the 30 minutes. Alright, you shouldn't exceed more than those time frame. So if you want to work on your analysis, you can work on your analysis on the weekly and the daily while you wait for the 4 hours for confirmation, or the 30 minutes. Then you enter with the 30 minutes or the 1 hour for entry. Alright. So if you have read your market structure, you will see those things there, your analysis time frame and your entry time frame. So I advise you guys to go and read your market structure. The first one I sent you, market structure, not the part one or the part two, the normal market structure. Read it. You will get your entry time frame and your analysis time frame. That's to give you the edge in the market. All right. Forget about those other things the market is talking, liquidity, this, that, but it's good you still know them. All right. So let's just do a top-down analysis on this pair, and I'll call this a day till maybe next week or when I get time again to do video. But if you have a question, please always ask question. Don't make that group be very boring. The reason why we are out there is to learn. So ask question, drop your analysis. I like that girl, whether it's Mary or Bidison. She always ask me question. That's why I like her. I don't even want to snub her. It's when you start asking me question outside the trading, I can feel like to snub you. But if you are asking me question concerning the oga, I no go snub you. I go wan answer you. I go wan follow you dey rapport that rapport, so that vibe go dey come out. So we are doing analysis here. We'll be using the that is the weekly time frame. All right, the weekly time frame. So not vex say my chart dey cluster, that is e dey very very small. It's because my eyes has been trained very very fast for the past few months. I have a trained eye now to check the market. So for me, this market is consolidating. I don't see anything here. So if you try to force anything here, you end up biting your finger. So let's just check now, what has the market been doing? Is it been trending? Is it been has it been ranging? Has it been trending? Is it in a consolidation zone? So if I watch now, the market is in a downtrend, but the downtrend is over. So I will take my trend line and place it like this. Starting from here, that was when the trend started. You can see that I'm not stressing drawing trend line. I can say, okay, I'm not using that point. Let me use this point as a starting point. Then I'll put it here just to get this guy in the trend. I'll put it here and then I'll say, okay, this is the trend. All right. Default. Okay. So we are in a downtrend in this market. First of all, it's very important you know your trend. If you don't know your trend, it will be very difficult for you to trade the market. So we have a good support zone here. It has multiple touches. All right. It has multiple touches here. So if you are drawing your drawings, always make sure you extend it because of future purposes. So do not extend it and you just draw it because it has end, you just draw it. So I've seen a support here. Now I'm trying to look out for a resistance in the market. God, sleep. So this is an advanced way. I won't be drawing it like as in someone who is trying to learn, but now you can spot a resistance here because it has multiple touches as well. So if you follow the starting of this analysis, what we did on the other one, I showed you the reason why all these lines are coming in. It has multiple touches, so we have a resistance here in the market. and I won't be focusing on why I said I'll be focusing on all these guys. I've already understand what I'm doing. I've already have a place where I can trade from. These 2 points is where I can trade from. So I'm done on the weekly time frame. I will go to the daily time frame to check what is happening within this point. I won't be thinking of what is happening around here. I'll be thinking of what is happening within the future move now. That is this particular point that I'm trying to highlight. Okay, let me highlight it out so that you guys can understand what I'm trying to say. I'll be thinking of what is happening within here, this particular point now. So I'll be going to the daily time frame to do more analysis review on it. So on the daily time frame now, this point is consolidating, is not moving up, is not moving down. So I will just mark it out as void. Void, where's my void? Where's my void? Where's my void? Where's my void? Okay, let me use the FOB. So this place is not advisable to trade from. All right. Are you guys there? Are you guys there? Abi you guys don't sleep? Okay, okay, thank God. I'm glad that you're there. So, but you understand what I'm trying to say? Okay. So, as at this point now, I won't be trading this market because it's consolidating. If you have read your candlestick Bible, it talk about consolidation. Consolidation is a state whereby the market did not give you a support, neither a resistance, but moving in a sideways market. And let me show you a consolidation phase right now so you guys can know it whenever you see it. This place is a consolidation phase. They call it choppy. Choppy, that's what they call it. It's either the market is choppy, hold on. It's either the market is choppy. Now, I can't say I can trade from this place. When I see the market moving like this, I can't trade from this place. The only thing I can only do is to look at if I got a chart pattern that will make me trade inside this place, because if you trade inside here, you lost your money. What I mean is that this place has taken people's money, millions of dollars, taking it, because why? It's just in a one zone. It's not going up, it's not going down. Despite you just see it move a bit, come back, move a bit, come back, move a bit, come back, move a bit, come back. No, it's not moving. That's not a trending market. It's just choppy, and you're not going to be getting any resistance or support zone, any new resistance or support zone, and which is very, very bad if you trade this kind of position in the market. The only way you can trade this position is using a chart pattern, in the sense of you are using a flag, a wedge, or a triangular shapes. So if you are trading with those triangular shape, a wedge, a rising wedge, okay, let me bring out the chart patterns. If you are trading with either any of these chart pattern here, especially this one, this one, this one, this one, this one, and this one, this one, this one, and this one, you're not going to get caught in the process trading with this type of chart patterns on this kind of market, on this kind of position. But if you're trying to trade with that kind of market with this guy, let me say this particular one again, you're going to get caught, because the market will just deceive you and then make you be in a loss. So that's what the market is trying to create here. It's not moving up, it's not moving down. That's to tell you liquidity is not in this market. People are not participating in this market. People are not buying this market. They are not selling this market. That's to tell you, when you see a choppy market, okay, let's identify chart patterns inside here. If you watch here now, there is a chart pattern. This guy is a chart pattern. It's choppy, but you can't trade inside it because you're gonna lose your money. You're not seeing an uptrend, you're not seeing a downtrend in the market. You can see it. And finally, the market broke to the upside. It first broke to the downside, deceiving traders, and then moved to the upside to earn people who move to the upside, put them in profit, and take out people who move to the downside in loss. So this is the reason why it's not advisable to trade a choppy market. But if you understand the concept of chart patterns, you can trade this type of chart. And if you watch here now, we have a wedge forming at this region, which can help you trade this market, but you have to be very careful because you are trading in a dangerous zone that might kill you or make you profit. So you just have to be very careful. And if you see now, the chart pattern run to the downside after breaking this support, this trend line acting as a support, and run to the downside. So this chart pattern gives you an edge in the market, even while some people are scared to trade this place. You will still be bold to trade it because you've saw your chart patterns playing out. So you just have to put your trend, your line, mark it out, and then wait for the break and the retest before you jump in into that trade and just take your money and get out from the market. So let's see another chart pattern. Here is a rising wedge. If you put like this, do not ask yourself, why am I seeing these chart patterns? It's because I've already trained my eye enough to see them. All right. So do not complain. Why is he only him seeing this chart pattern? You can see it as well if you train your eye to trade it. So here is a rising wedge, a flag. You can see now it move upwards and then break to the downside, came back, retest the trend line, and then run downside. So if you watch on this place now, this was the chart pattern that happened. This guy, this was the chart pattern. It moves up and then came back, break to the downside. So these are exactly how chart pattern work. They have already designed it for you to understand it. It's just for you to know the concept, know how to deal with them when you see them in the market. So if I was a chart pattern trader, only chart pattern, I will still be making profit in this market. When I see my chart pattern, I take my trade. When I don't see my chart patterns, I leave it that way. So right now, at this point, we have a stupid ranging market, which I won't call a support or a resistance. What I will do is to stay out of this market, because if I try to trade this market, I will lose my money. So right now, I only have a potential place to trade from. If this market will do this thing for me, then I can trade. If it will do this thing for me, give me my chart pattern that I always love, then I can trade. Are you getting me, guys? Hello? And oh, okay. Yeah. I hope you guys are getting value from this video. Oh, thank God. Don't worry, very soon we'll go dey analyze with Instagram. We go use Instagram dey analyze, or Twitter take dey do analysis. We no dey use here again. So if I see this type of move, then I can start trading this market. I won't jump in from here because it's a dangerous zone. The market is just waiting for somebody to just put his money and then take it. Alright. Or if he go respect himself, give me to the upside, to this upside, then create that thing for me, loss of momentum, then I can trade it. What I'll be watching out is for it to break this neck, break it, then I will start my entry from here, put it like this, target this guy. Definitely there will be an order block here, which I will mark out. If the market went away my potential stop, then I won't trade it. I will target it like this, then I will jump in to sell. Or the same thing happens to buy position. Enter from here, target the last leg, then locate any other block that will make it, that will hold the price. If the price will potentially try to reverse down, then I will do it like this. So this is exactly what I will be looking at if the market will do this type of two things for me, nothing else. And if we say let's locate this guy, is a chart pattern. Let's scale down to the 4 hours. You will see okay, let me from here draw the chart pattern out. It's a chart pattern. There's what we call cap, head and cap, and which the market did there. This is the head and this is the handle. That's when you put on cap like this, face cap. That's what the market did here. It first formed the cap here and give you the face. That's the thing to cover the front, to shade the front for you. So if you want to identify those kind of chart pattern, you can literally do it like this, just to identify this chart pattern now. For me, I will do it like this. This is my chart pattern here. This is a chart pattern for me now, like this. I've already gotten a chart pattern. Then I'll be waiting for this move. This is a triangle chart pattern. Let's check our chart pattern if there is no chart pattern like this. So let's go to our chart pattern. You can see now we have something like this kind of chart pattern. It's coming from an uptrend and then it broke the upside, right? You guys can see, right? And we have another chart pattern here now that it was consolidating. It either break to the upside or to the downside. Expectation, we are expecting that kind of move. We are looking out for either we have this chart pattern at that place or we have this chart pattern. So you don't just rush because you see the chart pattern. You just have to wait. I've already keep my expectation now on this market. So if I see the break to this upside, I will buy. If I see the break to this downside, I will sell this leg. Then I'll be waiting for the next move. If the market will form this guy for me to buy again. If it breaks to this upside, then I'll be looking out for a buy. Trade this move, then I'll be waiting to see if the market will form this leg for me to sell down. So let's scale down to 4 hours to see what the market is doing. You can see now on the 4 hours now we have a good trending chart pattern. You can see it now on the 4 hours we have a good trending chart pattern. So what I drew on the on the daily time frame was literally what is happening on the 4 hours. So for me, I have a position to trade now. I'll be very comfortable and confident to trade it. I'll be putting my position now from here, targeting okay, if break to the downside, I'll be putting my entry from here and I'll be targeting this last leg called the OB, other block here, this guy, or probably downside. Then I will watch out from here to be cleared out, this place to be cleared out. Then I will take my stop loss below it a little bit. That's my safe way of entering this market. The same thing I will do to the upside because now I don't know if the market will break to this side or break to this side. Then I will take my long position, put again, setting my long position to this side, then a little bit stop loss. Use this guy, I will use here because if I see the clear of this place now, okay, if I see the clear of this place, that is when I will jump in this market. Let me make this guy a little bit small. I will jump in, then I will put it like this now. Take my stop loss to this particular point. My take profit should be from here. But if you are not selfish, and you do it like this, it's good oh, it's good oh. It's good you look to the left side to know what is happening. On the left side, you can see now we have a resistance on the left side. You see? So it's not advisable to be selfish because the price now will literally get to this point now and hold, then pull you back down and did not get to your take profit. So you see now, so if I was to be trading now, I'll be watching out for this place. When price gets to this place, I will try to see the reaction. If price will do something like this for me, when it started running out from here and it gets to this place, I'll be very careful now to start watching. If price will break out and give me this kind of move to this up points, then I will allow the trade to run finish. But if price did not do something like that and price now came back, hit here, and price started coming back to me, I will just close the trade and started coming back to me. I definitely know that price is coming back to my stop loss. You understand? Then I will close the trade immediately. That is how we trade and analyze the market. So I hope this little knowledge and understanding shared with you guys now will expand your brain on how trading works. Trading is not a magic, it's not a father let it come my way, father let no. Trading is all about patience and understanding what you are doing. So the market don even start sef, market don open like dis. I know say gold no go don open. See they've already opened GBP to Canadian dollar. So let me see gold, if gold is open. Oh, gold never open, dem still dey break. So I hope you guys now understand the concept now of what we are doing, right? So you guys should use dis knowledge take hold body for now. Go and it's a nice one. You guys deserve it because you paid for it. You deserve it big time. You deserve it. So I've already done advanced technical analysis. I've already done the learning technical analysis for you guys. So next time when they ask do technical analysis, even if it's not beautiful, do not expect your chart to be beautiful. Your chart is only meant for you to understand it, alright? It's not to be beautiful. Don't let anybody tell you, look at your chart, it's very cluster, very rubbish. What did you do? As long as you understand it, you understand what you did, omo, follow what you did. Do not let anybody tell you, your chart, this is rubbish now. Look at chart, how I go analyze chart, it could be like this. As long as you understand it, what you did was very clear to your understanding. Leave it that way. Follow your rules. Do not follow someone's rules. Follow your rule. Follow what you understand. Do what you know how to do. That's what the market says. The market did not say you should follow somebody's rule because somebody own is beautiful. You want to beautify your own. Follow your rules. Follow it. Make your chart good to your own understanding, to your own knowledge. Then you are good to go. As long as you're making money, everybody is making money. The market not send which person chart what pass, which person chart 5 pass, who they analyze pass. Make money, na im the market tell you. So guys, we've come in conclusion of this class. So if you have any question, abeg ask me. I dey here. Make I chill small. So ask question, ask question, ask question, ask question. Yeah, you're welcome, you're welcome, you're welcome. Yeah, you can ask. I'm with you. Yeah. Okay. Okay. First of all, let me say something. One thing about trading is, if you understand your analysis, let me say you understand your trading analysis, you understand your psychology. Your psychology has to do with your way of thinking, all right? The way you think, that's your psychology. And again, if you understand your um that is your schedule to the market, that has to do with your own perspective, not my own perspective, all right? So if you understand those three things, you will understand the kind of trader you are up to be, all right? So when it comes to deal with future trading, let me emphasize on future trading. Future trading has to do with um, future trading has to do with advanced traders. All right. So if you are a crypto trader and you are trading future trading, I advise you, if you are not good with technical analysis and you're not really good with technical analysis, please and please do not trade future on crypto. All right. Do not trade futures on crypto. Just trade normal trading as others are doing. So if you are good with technical analysis, very good, when you know that your analysis is 99, let me say 98% accurate, then you can go on future for crypto. For crypto, you can go on future for crypto. So the aspect of picking a market, that's a market that you can trade from, this is my advice. If you want to pick a market that you can trade for, eh, this has to do with your pocket, right? It has to do with your pocket. The market that you can trade from has to do with your financial aim and your financial status. For forex, if you want to be a good forex trader, even if you have the 98% accuracy of forex, if you don't have enough capital, you can't trade forex. That's one truth. Despite the fact that people are trading forex with $10 and they make $1,000, their analysis is 99% or 90% accurate, and they trust the analysis. That's the reason why they are trading with $10 to bank more than that amount. A minimum advice I would advise for anybody who wants to trade forex, you have to at least have a minimum of $100 account to trade forex, in the sense of when you go in a loss, you still have enough way to run with your money. That's your $100. But when you're trading with a $10, I've tried trade with a $10. I won't lie you, I lost that $10 account because of why? I over leverage, one. Two, I was hoping to bank that $10 to $100 within 2 days, which I was able to get to that point, but I lost everything in the sense of greed. So if you want to trade forex, at least your pocket determine. And if you want to trade crypto are very volatile in the market. And one thing that crypto has to do with is capital. Crypto is volatile and it requires capital, in the sense of when you're buying an asset in crypto, you have to pay for the fees, the transaction fees, and lots other more that also go with it, maybe the spread or that thing. But for forex and other pairs like synthetic, although synthetic use currency, that's cryptocurrency, to before they do their transaction. So that's some aim you have to consider when you want to go into this type of market. But for currency now, you don't need anything like let me say fees or anything to do a transaction. You just need your capital. You are good to go, but you have to have enough capital. So your capital determine how you can position yourself on, this is the type of trader I want to be, this is the type of trader I want to be trading on, this is the type of maybe pairs or stuff I want to do in the market, right? So for my own advice for upcoming traders, if you want to trade, like you are the type of person who doesn't have enough capital and you want to trade, I advise you, like, for the past few days or weeks now, I've been hearing that synthetic is the kind of place to gather enough money to start trading, and which I have seen is true. To gather enough money to start trading, synthetic I believe is the perfect place to do that. Maybe with, because I can see now you can use $2, because my friend told me he gathered 2 cents to $10. I was like, in forex you can't even use $2 to trade. No broker will accept it. So when he was telling me that day, he said I used that is he said he used $2, that's 2 cents, to bank $10. The person burnt that account finish. The person deposit $2 and burnt that account to 2 cents. So he had to bank that account back to $10. That's to tell you that synthetic, they can even take 1 cent for per trade to even get $10,000. So synthetic is a place where you can at least use little money to start with. Your stop loss won't be that drastic, won't be that eating enough. But for currency, man, currency when e don enter stop loss, dey eat a lot, in the sense of they will start chopping your stop loss, and you don't I don't think the lowest any broker can take for you for currency is $10. That's to tell you you are using a 100,000 units to trade with that $10. So if any drawdown comes in, you are literally out of that market. Alright. So that's for my advice I will give anybody who wants to come in and wants to start trading either a live account or a demo. So if you are going for a live account, you don't have enough money to fund, I advise you either you go for synthetic, or when you know you are perfectly good, you can use that your little money, purchase a pro firm of at least account worth $5,000. Then you can be able to trade currency with full confidence that even if you have a loss, you can regain yourself very, very fast with the money left in your account. You understand me? But if you can scale a $10 account in currency, it's still good though. It's still good. If you can scale it, then you fund the $10 and start trading that $10. But do not over leverage. At least when you're using a $10, I expect you to use a lot size of 0.01, opening like one position. When you see you have already banked like $10 in that position, you can use that running position to open another position to bank another dollars if you understand your second entry point. So that is my advice for anybody who wants to use, that is, who wants to trade either currency or crypto or synthetic. All right. Yeah. You're welcome, bro. Okay, ask a question. Yeah. Yes, yes. Okay. Okay. No, I don't look out for any momentum. On my TradeView has make it TradeView has make it very simple. Please mute yourself here in energy, please. Um TradeView has make it very simple for we traders to know when the market is turning on and when the market is turning off. All right. If you're watching my chart now, you see this green light. I'm putting my my cursor to that point now. You can see the green light, right? Okay, that's to tell you that the market, this particular pair is already running on Asia section that has already opened. So we are already currently now on Asia section. So when it gets to like maybe around 8 in the morning Nigerian time, the Asia section will be over. All Asia people who is trading Asia section will leave that section and they will turn it to New York, yeah, to New York or London section, and which the whole world will start trading. The market has that time liquidity has already stepped in. People with high volume of amount has already stepped in to start doing exchange of currency. So on the exact session, the spread are always high, in the sense of if you want to get an initial session, you will see the spread. If per spread is giving you a $10, on the exact session you will see it like $50, $70, and it's not advisable because when you start trading at that time, you'll be running a deep loss. And if you have a position opening at that time, that profit that you have already make will get a little bit draw down because of that high spread. So when the London section is open and the New York section are open, then the thing will fall back to normal. You understand? So it will fall back to normal. Yes, yes. That is either New York or London session. And to to easily detect if the market is open, you can go on your chart and go on the chart point, then you will see the chart start moving. That's to tell you that section has already opened, and now the banks are at work, especially the Asia banks now are at work now. They have started doing exchange of currency with the Canadian dollar, that is the British pounds and the Canadian dollar. They have started doing transaction now, but it's not advisable to trade it because people are not yet awake to trade those kind of pairs. So they have to be a daybreak routine for them to start trading it. All right. Okay. Ha- have you downloaded your trade view? Have you trade account already? Okay. What you do is go on YouTube, search how to set trade view setup, and they will show you. Then you follow the steps to watch how to set trade view setup. It's very easy, and when you set them up, you will enjoy the view you're getting from trade view. Oh, I miss this. I miss this console. You're welcome. You're welcome. More session are to come for this. All right. So any further question? Hello guys. Any further question? I'm waiting. No, if any further question, no question can come in. Question can come in. We are still live. We are still live. Okay, keep on asking, bro. Keep on asking. We are still live. We are still live. Okay. First of all, what I would say for candlesticks, candlestick it tells us everything that is happening in the market. All right. The candlestick you see tells us everything, what the market is doing, what has been happening. So for the candlestick patterns, those candlestick form candlestick patterns. All right, but there is a way they form it. So if you say you want to start looking in candlestick before you get your patterns, you will get yourself wrong. But what I would say is that if you want to check on candlestick, it's very advisable to check candlestick on the higher time frame. Uh, Higher time frame like the 1 hour, the 4 hours, the the 1 day, the weekly or the monthly. Those candlestick that's those candlestick patterns, they are more effective and stronger. So compared to the one you see on the daily on compared to the one you see on the 30 minutes, the 5 minutes, the 10 minutes, the 15 minutes, even the 1 hour. You understand? So any reverse candlestick you see on the 4 hours, if you go check on the 1 hour or the 30 minutes, there is a lot that has happened within that reverse candlestick on those time frames, on those lower time frames. So what it tells you that the 4 hours time frame candlestick, any reverse candlestick on that time frame is very, very strong. It gives a reaction in the market compared to the one you see on the 30 minutes, the 1 hour, the 5 minutes. Those candlesticks are not strong at all. They are not strong enough. So if you're looking for candlestick, you have to check on the 4 hours, the 1 day, the weekly or the monthly. Do not look at them from the 5 minutes, the 10 minutes, the 15 minutes, the 1 hour. They are not strong and they are false candlestick, they are fakes. They can fake you, making you think they are strong candlestick and you fall in their trap, they eat your money. Yeah, ask. No, your question are not too much. Ask. As long as they have to do with trading. Okay, we have yeah, 8 hours is also. Yes, yes. Eight, yes. Okay, let me show you something here. Let me show you something here. If you watch here now, we have the daily, 1 day, 4 hours. Let me bring out the 8 hours for you. We have the 6 months as well. You can see the 6 months. Okay, the 4 hours. Um, let me see. Okay, let me type 8 hours here. So all time frame are here. They are working. It's because I don't have the paid version. That's why the 8 hours won't click. But trust me, all of them are working. If you pay for it, you will see all the time frame, both the 30 minutes, the 1 seconds, the 2 seconds, they are all time frame. This trading you're seeing is time frame. It works with time frame. Time frame depending on the energy you are getting from that time frame. If you are in the 4 hours time frame, you see the energy there. If you are in the 2 hours time frame, you see the energy there. 3 hours time frame, you see the energy there. So all time frame have their energy and what they display in the market. All right. Yes, yes. For let me recap again. Let me recap again. For a day trader, your analysis time frame. Are you with pen or biro there so you can take note? Okay. For a day trader, your analysis time frame should be the daily time frame, that is the 1 day time frame, the 4 hours. If you are to go below that, that means you will just check on your confirmation entry should be the 1 hour. So your entry should be the 30 minutes or the 15 minutes or the 5 minutes. You can also use the 1 hour as your entry time frame. All right. So for for swing traders, your analyzing time frame should be from the weekly, the daily. Your confirmation entry should be from the daily or the 4 hours. Den your entry time frame should be the 1 hour, the 30 minutes or the 4 hours, probably the 4 hours as well. Are you getting it? While while if you are a scalper, your time frame should be the 4 hours, the 1 hour and the 30 minutes for analysis, while your entry time frame should be the 15 minutes, the 5 minutes and the 1 minute. Yeah, if you are a scalper, your entry time frame should be your entry time frame, that's for scalper, your analysis time frame should be the 4 hours. Your analysis time frame should be the 4 hours, the 1 hour and the 30 minutes should be your confirmation, while your entry time frame should be the 15 minutes, the 5 minutes and the 1 minute for scalpers. Please, in a noisy place, mute yourself, please. Any question again? Yeah, I'm hearing you. I don't know where you are it's a bit far from your phone, so you have to come close to your phone. Yeah, I can hear you now. Huh? Wait, wait. Your mic is waving. It's waving. It's really waving. Okay. If you can, okay, please help her out. Help me so that I can understand what she's trying to say. Okay, she wants to have trade view on her laptop. Okay. Okay, what you're gonna do is go on your Chrome, just type www.tradeview.com and it will just take you to the TradeView website. Then you put in your email. When you put in your email that you have already created with them, as you put it there, you it will show the TradeView platform for you and you start analyzing with it. You're welcome. So any more question? Okay, this is it. This is it. If you want to use your Fibonacci, is you knowing the impulsive phase before you use your Fibonacci. All right. If you know the impulsive phase, you can use your Fibonacci. That's very, very important. Know the impulsive phase, then your Fibonacci comes in. All right. So if you get your Fibonacci phase, that is your implosive phase. Let me show you for example now. Hold on. Let me go on 4 hours on this pair so that you understand what I'm trying to say. You can see my chart, right? Okay, I'm trying to find an implosive phase for you so you understand what I'm trying to say here. Hold on. Okay, let me use this guy here. So practically, we are in an uptrend. Practically, we are in an uptrend here, and this is your implosive. All right, this is your implosive phase, and this is your retracement phase, and this is your implosive phase. So the big move are your implosive. Mute yourself, mute yourself. The big move are your implosive, and the shallow points are your retracement. So we use Fibonacci for your implosive phase to determine when the retracement is over. You're getting me? To determine when the retracement is over, and which, if you want to determine the retracement phase is over, you have to use either the 61 or the 50. But if the 61 and 50 did not hold, that means we are having a deep pullback, and which tells you that you should use the 78 Fibonacci retracement phase, and which I'll be plotting now on this pair. You will take it from the beginning of the implosive to the ending of the implosive, which is from here to this point. I hope you guys can see my chart, right? So which is from here, you will mark the candle wick. If the candle have a wick, you mark it. If you don't have a wick, mark the body, as long as you take from the beginning to the ending. So I have designed my Fibonacci to give me the reversal and the buy side. I designed it myself. So using this Fibonacci now, you can see the are you there, Mary? You asked a question. You can see that the price was reacting to 61.80 Fibonacci retracement. So for me now, I can start taking my long here. I'll put my entry here. I'll just set it down, put it here. Then I will target this last high. That's how to use Fibonacci. You target the last 0 degree. Then somebody has auctioned out. I think somebody wants to join or something. Okay. So I will put the stop loss around the 70% Fibonacci retracement. That's to tell you that I have a good entry for my trade. And if you watch now, the price was strongly moving down, but when e get to the 61.08, a reaction showed that the price started moving up. It started pulling back, pulling back, pulling back until a bullish presence appear and push to the upside. So that's how you use your Fibonacci, in the sense of you mark from the top to the bottom of the Fibonacci level, then taking the implosive phase of the Fibonacci. Alright, I hope I've answered your question, Mary. Okay, this is 4 hours time frame. I will listen. I will send you a PDF that will tell you how to use Fibonacci. All right, and to use a Fibonacci, you have to work with Fibonacci. Fibonacci does not work with any time frame. As long as you know the trend, you understand the trend, and you know the retracement and the implosive phase, you know where a pullback is likely to happen. That's where you plot in Fibonacci. All right, because okay, okay, you're welcome. Because you know just want make any question finish. Because why? How we determine a Fibonacci it's likely to be used is when we start seeing retracement after a strong implosive move. Then we will start seeing that Fibonacci retracement. That's when we take our Fibonacci and start looking for a position to place either a buy or a sell on that position. All right. Huh? You understand that, right? Oh, good. Sleep don't be my. Please mute yourself if you are in a noisy place so man for the hear they ask. I don't know who is in a noisy place. The thing is making a wave. So if you are the person, just mute. I can't hear it again. So who want to speak now? Speak. Okay. 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 I did not do the Fibonacci level. The Fibonacci level has been designed by itself for us to use, we traders. So if you plot your own, you will see the Fibonacci level, but you have to design it to your own taste, which I did. I designed it to my own taste. You understand? What I mean by taste is to my own understanding so that I can be able to use it. You understand? Yeah. Okay, you are really welcome. See now, dollar don open now, dollar index don open now. Dollar don open markets. Price don weak. So guys, you're welcome. So we'll call this a night for tomorrow. If I sense of no other question. Huh? Okay, sure, sure, sure. I will send. Yeah, I will send. That's not an issue. So good night, guys. I love you all so much. And thanks for turning up. God bless you so much. Yeah, you too, guys. You too. All right, guys. Good night. Yeah. Don't forget, pray before you guys sleep. Oh, it's very important too. All right. Mr. Easy. All right. I greet you.
I'm at Mister, I'm not gonna lie, sir. I'm not going to know person why I go ask self again, sir, if you ask me.